Hello to all traders. Today I'll show you a unique strategy that you're really going to love. It's called the bounce from levels with confirmation strategy. These indicators are available from your broker, so you shouldn't have any major issues with it. Let's look at an example of this strategy. Ideally, you should use this strategy with levels. You add two indicators. The first indicator you add is stochastic. The second indicator you add is reduced turn. After you've added the two indicators, you can configure the settings as you like. You can make the width a bit larger to highlight the strength. You can also highlight the stochastic for your comfort and convenience. For example, I put the line as thicker here and I leave all the colors as they are for my convenience. Okay, let's start with the stochastic. How can we determine if the signal is for buying or selling? See, when we want to make a buy trade, the price approaches the support level. In this case, we'll highlight where the price is at a minimum or maximum. Here, we have a minimum support level. This is the farthest point the price dropped. We need to determine the strength of the movement by ATR. The ATR shows volatility when it increases. That means if the stochastic shows that we are below the zone, at 20 we place a buy trade. It's also very important to check if the strength is sufficient, like here, for example, or here, or like it will be here. This means for this line plus or minus, we use the previous history as a reference. This is a great volatility solution. And we cross our zone with the stochastic. We also have a good support zone. This means the price will go up. So basically, a similar situation here if we put it up for sale. Let's even try to find it, this situation, if it happens. So here we have, yes, a good zone as well. I see the level here. Level of resistance. Also we have strength. Also, we have the stochastic present. The stochastic went below 80 down from the top. We will set, and we see the strength of the movement. The strength of the movement is sort of here, fluctuating, yes, in the flat. But there's nothing to be afraid of about that. Basically, we see from the previous history where the strength reached its maximum. And we are about in this strength of good volatility. That is, the price here will go very well down. It's already going down. You can see the candles. We can enter this expiration. We will find the best options so that we can fully evaluate the situation and start earning. Let's take a look at my trading if we find these deals more confident, more effective. Guys, I also wanted to find a strategy combination for the forex pairs, but unfortunately, there are no good opportunities right now. We'll have to wait a bit. Or I'm looking on the OTC market simultaneously. By the way, I found a good forex pair with the great situation, but the broker only pays us 40%. That's unacceptable, so we'll keep looking for other suitable options. Okay guys, excellent. Let's look for other forex pairs. What don't I like here? There's no volatility. As we see in TR, there's simply no volatility. This is really bad, guys. Let's keep looking for other pairs. What do I see here? Here we have average volatility. So the price isn't quite ready to reverse strongly, but I can see the situation is more favorable here. But what don't I like? The level here is about to be reached, so the situation is not very clear. But right here, with average volatility, we can take a risk. Let's place a bid to increase here. I am ready in advance that when the deal isn't so certain, I am prepared to hedge it. And now this is very interesting. There's good volatility. I'll place a 5-minute trade. Let's open a deal here for a decline. What's happening here? Of course, it's preferable to wait for perfect candles for a bullish engulfing. There's a good level here. What do I see next? There's very good volatility. And we're observing here. We've gone beyond the stochastic over 80, so the price is going to reverse. But it might fluctuate up to our upper level and then decline. Just look, what a perfect trade here. But let's not rush, because 2 minutes is quite a long time. Anything can happen in these 2 minutes. It's a long period. Why is it impossible to calculate the ideal expiration? There are many factors and I'm not the only one trading, guys. In my experience, each forex pair has its own weight, its own form, it's unique. For example, the euro-dollar pair is comma. You take USD CHF already, it works completely differently there. The currency pair leads itself, and it's absolutely like that with each one. I'd recommend choosing just your top 5 currency pairs and observing them. Just trade every day and you'll get the hang of it. Yes, exactly. For example, the Australian yen behaves one way, while the euro-dollar pair trades a bit better in the evening. With such analysis based on 1,000 deals, you'll start to feel and understand them already. We were a bit on the edge, but we didn't have enough time, right? Let's open a position on a decline again. We're waiting here, guys, for the bullish candles to reverse, which would be perfect for a decline. But for now, I see potential growth, but it's not there. Let's wait for a better situation. So guys, great, we closed here. I waited a long time for our deal to close, but volatility was weak. The most important thing is that we were in a good zone, around 80, where the price reversed. Let's look for other options now. So here, guys, we'll bet on a rise for 5 minutes. Next, let's determine that there is a very good level here. Also, based on the stochastic, we are above 20. Volatility is pretty average, not weak. The price should rebound, so let's watch. The only thing that worries me is why I rushed. The candle is still bearish, not bullish. So guys, great, we also made a profit here. Yes, the volatility is just crazy, excellent. The price indicator, as we see here, can be set in an ideal spot. And the price will also be in the positive. The signal we saw was excellent. The indicators are doing their job and I'd recommend this strategy. It's based on levels and defines both volatility and stochastic, which is doubly useful. Better results, so guys, take note. In fact, develop yourself, study strategies. I recommend testing this strategy on a demo account to understand it well, and at the same time write your opinion. What do you think? What to record in the next video? What strategy will be very important to hear your answer?